Okay, Sherman here. Today is the 14th of February. I'm gonna just look back at some of the trade ideas. Let's see what we have. So, yeah, just move up, slow, slow time factored pullback. So, I'm looking for next move up. That was pound Swiss, this Aussie dollar. Same thing. Yeah, if we look at stuff like this, so it's all pretty much the same. It's trending up, Aussie dollar. So yeah, it's basically that too. So yeah. Oh yeah, it's okay to just if let's say because this will happen on like a Friday, right? So if you don't want to keep it, it's fine as well. Just take it. You might pull back, you might go again, but if it's Friday, because as a day trader, you don't have to keep trades. If you don't want to, you can always look to enter again in the coming week, right? So in this case, when up, if you don't want to keep it for it to go higher, that's fine, right? In any case, Tuesday, when Monday, when Tuesday, it might actually pull back. Okay. Maybe the pips have already been closed. I actually closed it already. So, pound cat. Mm, place of value. If this one was to come down over here, that would have been a good push to the upside. No, this is actually what you wanted. See this here? You actually wanted price to go up, but not from here. You actually wanted to go from here. That would be the good one. So the trade idea was it's a good trade idea, but price decided to do something like this, right? So decided to do something like this. That's okay, because trading this type of structures requires a lot of experience, and things can also go wrong because if you enter anywhere to try to go up, you can see, you know, not much, not much value. So if you kept it and thinking of that, well, actually, it went sideways. So that's why not the best place to trade in this region. Right? So good trade ideas get you into trade, but also they also prevent us from hopping into trades that they don't offer value to us. This one is easy. This one is up and then down. This down is tricky. So next week I'll be very interested to see if there's any sell because this is considered counter trend. You see, so when it reaches the top, some kind of reaction. This would be very interesting. What would make nice push move to the downside is it needs to actually come down like this. Actually, even if it crawls, it's fine as well. That means this is going to be a leaning diagonal, see, because the credit structure is so sharp. So that's how. Maybe that's sideways. It means that's down. Anyway, here you could and then you could go back up again because after all, it is in. I mean, price must follow the labels, right? So they must follow. That's just a joke. So yeah, we'll see what happens on next week. Uh, dollar yen doing exactly you see here. So if let's say price was over here and you're looking buy right because you were thinking what means you what people were thinking impulse correction impulse right, but you can see not so easy because look at it. So the buy actually is not correct. The minute it's here, the buy is out, right? The buy was actually valid somewhere here. But once it goes up there, it's shaky. So this is the place actually to exit the trade on the Friday. So the next trade would be for it to come back down. That's why you put a box over here because you know price wants to get back to this level. Okay, so from here is where we start decide which way is it going to go, up or down. That's something to be decided maybe on Tuesday. So the time factor is important, right? Monday, Monday Singapore time, nothing's going to happen. So possibly Tuesday we're going to see something happen. And also we might have to check the news. We might have to check. Is there any news coming out? I wonder. Mm, Let me see. Uh, okay, so well, I'll look at it maybe next week on Tuesday. I'll look at it again. So now it's a little bit early. What's this euro dollar? Euro dollar is a weekly time frame. Yeah, I put here weekly, but it looks good for upside actually. There, this looks actually good. This looks like a good crawl to the upside if it could go up. So maybe maybe tomorrow. Next week, which is actually tomorrow. Yeah, because it's Sunday over here. That's possible. Let's look at all the trade ideas. Aussie care, yeah, Aussie care. As you can see, so over here I had put if moving average is no longer respected, that's one reason to look for exit. So far, it's still staying within. I mean, you see here the moving average. See, price is above. See here, it's above. So long as price is above, so long as price above the moving average, it's fine. But I took the trade off because it was a Friday, so stick it off. We always enter again later. Or at least just take off some. Let me leave some to run. Urian was a good trade. This one, it's a nice idea. Boom, bum, bing, bang, boom, 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 boom. So that's standard stuff, right? It's nice. Straight. Ethereum, yeah, it's also pretty standard. So you draw the line, a trend line, a break of trend, just take some pips. Let's look at this dot. This gold. Gold's interesting. Gold's at this point where it's really kind of funky. This moving average is kind of important, so we have to take note of that because there is a pattern. Look, the patterns where it comes close and then it moves. It comes close and then it moves. So now it's close again. Now there's no guarantee that this is not a magical moving average, yeah, because this could always just or just and just not even respect the moving average. So we got to actually monitor what we got to actually monitor what's going on. And if there's any small like push to the upside, that's when you buy. If you buy just because it touches, uh, that's one way. But the stop loss has to be pretty big. I see the stop loss has to be pretty big, right? So, but if you had something like this line here, see this kind of makes sense. This one, if it goes place around here, at least you broke a trend line. It shows some the strength. Maybe you can at least go a little bit, right? So go will be interesting. Let's look out for that one. What's this? Dollar cat. What did I write here? Dollar cat. So I said dollar cat should be there's this over here, there's something over here. So when it comes around here, was it's possible that there's upside. So uh I remember this one. I remember this one. I actually did get aggressive here, but when it came back down and around here I just did I take a trade off? I can't really remember. I think I did. I think I took the loss. Yeah. Because I was too aggressive here and price started to close below, you see. So I did not want to live through that. Even though I knew this is probably would go up first. Even if it goes up this way or it goes up and comes down, I was pretty sure there's some kind of upside. But in my trading, sometimes when I see opportunities elsewhere, I do close trades in order to hop onto something else. So instead of trying to make the money back, I can actually hop on other trades in order to make the money back and just close it for because yeah, it's okay. Small losses are part of the trading. Mm, and yeah, so pretty nice. What else is there to share, huh? Let me see. Maybe I can just take a quick look at some pairs. So this okay. There's one thing that I have in my mind that I'm just thinking about, and that's about one of the most important things about currency trading. Uh, You know, I've always stressed that timing is important. Um, but there's also different kinds of what do I mean by timing? Timing could be like a push up. You wait for some you know good some sizable time factor pullback. Must be sizable. Right? If something that's so sharp like this, strong like this, it's not the most ideal pullback. But if you are familiar, then you know that this can be all the correction. However, for most people who are starting out, I recommend a time factor pullback. These are always easier to trade in relation to this. So um, timing is definitely very beneficial. If we implement more of that, we don't get into so many bad trades, right? So in time factor trading, this is what's very important. It gives me a bias. There's another kind of timing. And this timing I want to talk about is I came across a super account, and this super account uses the method or the idea of timing in a different way from mine. Their idea of timing is to trade only during a certain period. So let's say that they trade around Singapore time around 12 p.m. to 2 a.m. So during this time, right, the some of the currency pairs hardly ever move. So as a scalper, because that's what they do, they scalp like 30 to 40 lots, and they're looking for anywhere like 3 pips to maybe 6 pips. Yeah, and maybe you take about two or three of these within a 2 hour time frame. So that is one idea of timing. Only trade with during this time. So for people who are good at scalping, that's something interesting as well. Um, um, and the reason they do that from my analysis of all the trades, right? I went through all 100 trades. Is that this type of trading requires very low volatility, meaning that they don't want to trade that. For someone like me, I want to trade that because this for me movement means money. Big movement means money because I'm putting like maybe 2 lots, 3 lots, and I need sizable movement in order to get my money, right? As well as to you know get in or out of trades. Right? The movement tells me what to do, but when you're trading like 3 to 6 pips, it can be just tuk tuck. No price is just this and that. That's it. There's there's no real guarantee where price will just go up like this. Maybe you go down here, maybe you go up, but just very small. Just playing a very very small amount of pips. You know, so that kind of timing, um, I've seen that work for one account, and it's the discipline to only trade during that time is required, right? Um, because one bad trade, and in scalping, one bad trade is all it takes to wipe out the profits of 10 good trades. So having the discipline to adhere to only that span of time, 12 midnight to 2 a.m. Singapore time trade, something that must be adhered to. If they don't adhere to that, I can see them going bust. Right. So that's one thing. Another way of trading also with respect to time is looking at news. Right. So let me give 1 second. Okay, so yeah, I'm back. So over here, something that you want to take note of, important timings, right? So next week we're going to be looking at these these pairs. These pairs are going to be important. So when you know that this red color it's considered critical, right? When these news are going to come out, you might get spikes in movement for the particular currency pair. So there's no news here, so there's no news here. So you know, if one wants to stay out of trades on Monday or Tuesday, because if we don't, the trader doesn't think the price is moving, he might not want to trade. Then when price moves into moves to Wednesday, they have core retail sales. You know, frankly, for me, I don't really care so much about the numbers over here. So let me just no, I don't really care so much about that. What I do care is that when I see news, I think this is a chance for me to make money. Some people they don't want it, all right. But if you can forecast the price direction, that's exactly what we want. So when you trade, right, you have to trade with people who are familiar with certain styles of trading. Because you play if you let's say we are people who are looking to go for 40 to 50 to 80 to 100 pips. Then we are trading with, and then our group has people who, if let's say you're working with somebody who only wants 6 pips, that's not a good fit because he's going to be fearful of news. Whereas for people like me, there's no problem at all. Right? His stop loss might be pretty small because the guy is a scalper. For me, I'm someone that is comfortable with a bigger stop loss. Right? Um, so the styles cannot mix. Right? They mustn't mix with each other. So to me, definitely Wednesday 9:30 p.m. It's opportunity for money. Thursday there's no news. Friday we have PMI. Pound. So this is going to be very interesting. That means something will be. That means so if we look at pound, right? Let's go look at pound. Let's see over here. Let's see. Yeah, pound is going to something's going to happen on Friday for pound. So if let's say price happens to somehow, let's say just a simple idea, simple trade idea, something like this, right? If pound somehow see how it crawls like this, it goes really nowhere. See how it crawls. See how it crawls. So what if in the coming week it crawls from Monday to Thursday like this? It means by Friday, when pound comes out, regardless of whatever data comes out, the chance of this going up is going to be quite high. So that's one way of actually timing ourselves uh, to get in on the best move possible. You know, time ourselves Monday, Tuesday, Wednesday, Thursday. Then Friday, you see indications of upside, take the trade. Then that will be a very good trade. Because generally this is upside. But what if this doesn't happen? What if all this doesn't happen? Let's say price does not come down. Wednesday, on Monday, Tuesday, Wednesday, Thursday, it somehow cross real high like this. Then you know that such moves, right, cannot be sustained, right? So on Friday, this might actually come back. You see, price when it shoots up, they can never sustain. Like they don't just go for whatever. They do pull back. You see, right? They do pull back. No matter how bad it is, they always pull back. Ultimately, no matter how bad it is, does it going? Does it going to? No, it still pulls back. Right? No matter how bad it is, it still pulls back. No matter how bad it is, it still pulls back. So what I'm trying to say is that um, not trading and waiting for the right timing and seeing what price does from Monday, Tuesday, Wednesday, Thursday could give an educated guess on what's going to happen on Friday. So that's one way of using the time factor as well. Okay, so these are different ideas. Using news as a way to time the markets. Again, the trading strategy needs to coincide with this type of trading. A scalper would not want to trade during when news is out because the spread gets too large. You see, they'll be stopped out of the in 1 or 2 pips. They'll be stopped out, so they have to avoid news. For them they have to avoid it. Um, and and of course, in time factor trading, we always like um, nice time factor pullbacks. It's always a good thing, right? It's always a good thing. You see all this nice strong push and then a nice time factor pullback for the next one. That's it looks easy when I do it, but it's a lot more complex when things get complex, and it can get very complex. Okay, so but master time factor trading, time it well, and trading will be much easier. Okay, so okay, I guess that's what I can share today. Thanks for watching. Hope it helps someone. And I will stop share and end.